The idea of growing $50 into $1,000 or more is very appealing to many traders, especially beginners. But is it real? Is it possible? Can you do it? Well, to be honest with you, it's possible. I've done it before. You can do it. Anyone can do it. But it takes a lot of risk, a lot of luck, and some very big patience. Well, in this video, I will show you some realistic strategies and tips that you can use if you want to grow a small account. So the first thing that you need to think about if you are trying to grow a small account like a $50 account is your risk to reward ratio. So what is risk to reward ratio? Risk to reward ratio simply refers to the amount of risk that you are putting in place and the amount of reward that you are expecting for that risk. For example, if you are risking $1 into a trade and you are looking to make $2 from that trade, it means you are using 1 to 2 risk to reward ratio. So risk to reward ratio is very important in your trading. Why? Because as new traders, it's possible, it's very normal for you to make a lot of mistakes. But if you have a good risk to reward ratio, then it simply means you will need fewer trades to cover up for more of the losses that you make in the market. So for example, let's say you place 3 trades and you lose them all, and then the next trade you win, and you are using a risk to reward ratio of 1 to 4. It simply means that 1 win will cover all those 4 losses that you have had in the beginning, and that means if you were in a drawdown, your account will be back to break even. So a good risk to reward ratio is always getting more than you risk per trade. It's not about the win rate of the strategy, it's about the win rate balancing with the risk to reward ratio. So to make profits, only need a strategy that wins 40% of the time with 2 to 1 risk to reward ratio. That is gonna guarantee you to be in profit. So let me show you a few things, few tips that you can do if you want to grow that small account. First of all, you need a strategy. Just like I said, I have many strategies on this channel. You can check the description. I will leave some links, some very good strategies that you can start using and grow your small account. Once you watch the strategy, once you have the strategy, the next thing that you need is your money management. So how do you manage your money? On this channel, in any other channels, the basic rule for money management is risking 1% or 2% of your account per trade. But when you are trading a small account like a $50 account, a $20 account, there is no point that you can be risking 1% of your account. So today I want to show you a system that you can use for you to know exactly how much are you going to be risking per trade if you are trading that small account. So this system or this strategy is called the Kelly Criterion for money management. The Kelly Criterion, what it does is it calculates the amount of money that you can risk per trade or per bet, because this was originally derived from casinos and betting shops, right? And we can use it in forex trading also. So it calculates the winning percentage of your strategy and your risk to reward, and it gives you the amount of money that you can risk per trade. So this strategy basically uses 2 things. Number 1, it looks at the winning probability of your trade, and also it looks at the win to loss ratio, which is the risk to reward ratio. It's gonna give you the optimal amount of money that you need to be risking per trade. So this is the formula for the Kelly Criterion. The percentage that you are going to be risking, which is the K percentage, should be the win rate minus 1 minus the winning probability versus the win-loss ratio. You don't have to calculate this because I don't want to get you back to school, right? But I'm going to go to the Kelly Criterion calculator here. I will leave the link of this website below. It's called fxhelpline.com. So you are going to come here and you put in your win rate. So first of all, once you go and find the strategy in the description of this video, go and backtest that strategy. Once you backtest that strategy, you come back with that strategy with the win rate and the risk to reward ratio. I also leave the link for you to download the strategy backtesting journal that is going to help you backtest and see the win rate and the win to risk to reward ratio for your strategy. So let's say you backtested the strategy and you find out that your strategy wins 40% of the time. So it's 40 wins out of 100, right? So if you backtest 100 times, you get 40 winners and 60 losses. And then the risk to reward ratio, let's say, is 1 to 3. So here is you put the reward ratio. The risk is always 1 and the reward ratio is 3. And then you put the Kelly fraction. So the Kelly fraction can be quarter Kelly, it can be half Kelly, it can be full Kelly. So what I recommend you to do is use the quarter Kelly, which is have the minimum risk, and then you hit calculate. Once you hit calculate here, the Kelly criterion percentage is 5%. So you should be risking 5% of your account if you have a risk to reward ratio of 1 to 3 and you are trading a 40% win rate strategy. If you trade a 5%, then chances of you not blowing that account and growing it is very high. So after 100 trades, you are going to be seeing profits if you do exactly this. The code, the Kelly criterion fraction, it's used in casinos where people play blackjack and all other things related to betting, but you can use it also into your trading. So tell me if this interests you. If it does, there's two things that you need to do: hit the like button and hit that subscribe button if you are new to this channel. If you